Thank you for listening in to this very informative interview titled Home Business Tax Advantages with Carl Roller and Dr. Ron Mueller. Carl Roller, our interviewer, has been a custom home builder in Southern California for over 20 years and has owned several highly successful home-based businesses. Joining him today is Dr. Ron Mueller, a certified tax expert in the home-based business world, as evidenced by his top-selling book, Home Business Tax Savings Made Easy. Ron has popularized the phrase, the more you know, the less you owe. Dr. Mueller has been an investigative reporter, has an MBA and a PhD in business economics, and is a sought-after speaker in the area of home-based business tax advantages. And now here's Carl Roller and Dr. Ron Mueller.
Well, if you've got this CD, somebody around you that knows you thought you'd be interested in finding out about the tax benefits of starting a home-based business. And that is particularly important today because we're in a very unique time. We're having lots of people look for second chances, people that have been in one career perhaps for many, many years, and that opportunity in that career has gone away. Many people who are still working, in different positions are finding themselves doing the work of 2 or 3 people because there's been a lot of layoffs, and then instead of people getting raises, they're actually getting more work to do. So the dissatisfaction today you find in the workplace is very high. People are dissatisfied with the people they're working with, the career they chose, the money they're earning, the people that they're having to hang out with, and they're looking for plan Bs. And many people have found themselves working second jobs. Wives are working second jobs. Anymore, it seems that most households have to be a 2-income or 2-career household. And when that happens, people find themselves in a situation when they're looking for options. And what most people don't realize is how many options are available to them and sponsored, if you will, or supplemented, if you will, by the government. And we've heard of grants and we've heard of lots of things like that, but many times grants are very difficult to get. There's a litany of paperwork to do, and you may not receive the grant. It may be something that you have to pay back if you don't follow certain rules, all kinds of hoops to jump through. And we're not looking for hoops to jump through. What we're looking for are the benefits and the help that you can get from the government with regard to a home-based business and increase your income. So along those lines, you probably like me, have heard lots of people talking about all these benefits that you can get in a home-based business, the tax advantages. But really, what are those tax advantages? Where do you find them? How do you qualify for them? Also, one of the things that seems to be really scary for a lot of people, I can include myself in this category, is record keeping. If you're not very organized, how do you keep the records of all of this information that you have to keep? And what records do you have to keep? Do you have to keep track of every little thing? All these questions come to mind. So finally, I can tell you that, there's been information that's now been made available in a very easy way to understand, especially for those people that are starting a home-based business, running an existing home-based business, and it clearly identifies where the tax deductions are, how to keep track of them, and the benefits of being in a home-based business. And frankly, if you're not doing it now, after this CD, I'm sure you're going to realize that it's something you need to put some time, energy, and effort into. And the title of the book that was written that's going to be our guide toward helping you attain this is Home Business Tax Savings Made Easy. The more you know, the less you owe. And to help us understand that, we've invited the author of the book to be interviewed with us today. And it's my pleasure to introduce you to Ronald Mueller, who's really been an expert in this for many, many years, and he's going to talk to us about that. Now, Ron, I'm so happy to have you here today in the studio where we have a chance to go over some of these really important things.
Thanks, Carl. I'm delighted to be here because that's my passion is sharing this information with people who need this information and usually don't even know they need it.
Well, Ron, I know that you're not a CPA, and you're not an accountant, and it makes me wonder, how in the world did you go down this road, and what made you decide to write this book?
Well, the fact I'm not a CPA and not an accountant should be good news to people listening to this CD, because that means might mean I speak English instead of accountingese or governmentese or legalese. I went down this road as an accident, actually. I was looking for this information for myself. I was at a point in my former career where I was looking for the opportunity to work from home because I was tired of the commute, tired of sucking up exhaust fumes, tired of working the long, long days away from my family. And so one night on the way home from work, I was starting to compute in my head about how much money I'd have to make from home to be equivalent to my corporate salary, so my family wouldn't take a hit financially. And so I decided that night on the way home, I stopped at a bookstore. In fact, I stopped in 2 malls, went to 2 different bookstores, and I told the information desk that I'm looking for the answers to 2 questions. They might be in 1 book, maybe 2. One of them is, what tax breaks will I get working a part-time business from home? And the other question is, how do I compute the value of those tax breaks, the financial value of them? Well, I couldn't find it in either bookstore. They couldn't find it online in their database. I went to Amazon.com when I got home, couldn't find anything there. I was living in Washington, D.C. at the time, so I even went to the Library of Congress. And what's significant about the Library of Congress, which, by the way, is available to the average taxpayer. A lot of people don't know that, but it's a government building. Of course, a lot of government buildings are not available to taxpayers, but this one is. What's significant about the Library of Congress is it's the only place in America that has a copy of every book ever copyrighted in America. So if it exists in print and it's ever been copyrighted, they have one.
Sure.
So Library of Congress works a little differently. You submit your question in writing and you go home and they call you in a couple of days when they've researched it. When they called back, they said we couldn't find anything.
Oh, my goodness.
That's what began the trail that led to this book. I was part of my background is I've been an investigative reporter, so I know how to find sources and how to interpret, how to follow leads, how to find out when I'm going down a dead end alley when I'm not. So I was intrigued and frustrated both because I'd been told since I was a kid caddying on a golf course in Iowa, way back then. Ever since then, I've been told by people who are successful in business that the first step in becoming successful is starting your own business because that's where you get the big tax breaks. So I just started peeling the onion. I started looking for people that knew something about it, let them lead me to another source, And I spent about a year uncovering, finding, discovering the tax breaks that were passed specifically for home business, small and home-based business owners. And then I spent about another 6 months doing the hard part, translating all that into English. The convoluted tax code does not need to be something that the average person cannot read and understand. And that's why my commitment was to produce a book that was technically accurate, but also easy to read, a fun read, a light read.
Well, I can say I've read it myself, and I was very excited after reading it. As a matter of fact, I do want to let the listeners know that you have an MBA and a PhD. So, as you mentioned, you do know how to do research. So, along those lines, I got so excited after reading your book. I remember talking to a couple individuals about it, and their first question was that they just didn't know or believe that it could be legal to do some of these things. I mean, do you get that often?
Oh, I get it a lot, and the reason is because there's been almost no publicity around it. See, normally when Congress passed tax breaks, well, let's back up for a second and talk about why these tax breaks exist for home business owners. Congress had determined that they wanted to stimulate the growth of the small business sector in America. The plan was, or the idea was, if every taxpayer had a part-time home-based business, that would provide a partial safety net, some stability for our economy. Because if you go to work tomorrow and find out you don't have a job because your company got downsized, right-sized, cap-sized, whatever it got, what you got was unemployed. Mm-hmm. They'd rather you come home and instead of coming home and look up the address of the unemployment office, they'd rather you come home and ramp up your part-time business to full-time. That's good for our economy. So then they said, how do we get people to do that? How do we get people who are already busy to do something that they wouldn't otherwise do? And, well, what's the great motivator? Money.
Sure.
It's not the most important thing in life, but it kind of ranks up there with oxygen. So they said, if we pay people, they'll do it. Well, what's the easiest way for Washington to put money in our pocket? To take less money out of our pocket. So they said, let's just give people tax breaks. Let's give them significant tax breaks, enough that will increase their tax refund by thousands of dollars. And let's not make them wait till April 15th to get the refund. Let's let them collect it all year long. That's what stimulated, that's what started this whole process. But what happened was they didn't pass one bill that had all these measures in it. When the media gives a lot of attention to a tax bill, they kind of they showcase the key item or the key category of tax deductions or tax increases, whatever, in the bill. In this particular case, Congress passed tax breaks that were sprinkled into several tax bills over a period of 3 or 4 years. So it didn't get media attention. It's also positive news, and that doesn't get much media attention either when news is positive. So very few people knew about them. The IRS doesn't tell anybody anything. They want to keep you in the dark. They're perfectly happy with that. And even a lot of tax pros aren't aware of the significance of these because these are so new that there still is not one single question on home business tax law on the CPA exam. Can you believe that? And I only know of a few colleges in America, either business schools, accounting schools, or law schools that have a mainstream course on home business tax law. So it's a very new area that most people don't really understand.
Well, I know I've experienced that before when I've talked to accountants or tax preparers myself, and I talk about a deduction that I want to take, and they'll tell me, no, you can't take that, a red flag is going to go up or something like that. I mean, do we have any defense against that? I mean,
I love that. I love that, Carl, because I have a personal / professional opinion of about where the term red flag came from. I believe it's a term invented by tax preparers and accountants to give an answer to clients who ask them questions they don't know the answer to.
Okay.
It's easier to say that'll raise a red flag and increase your chance of an audit it's easier to say that than to go look it up. I don't know of any category of home business tax law that increases your chances of an audit or that raises a red flag. Now that may have been the case a long time ago, but in the 10 years since I've been developing expertise in this area, it just doesn't exist. There are no red flags.
That's amazing. So basically, most people, the CPAs or accountants that you would go to, aren't really up to speed on most of these things then.
That's right. And the problem is they don't know what they don't know. You know, when you're learning to drive a car, remember how the driving instructor said over your right shoulder is a blind spot? Mm-hmm. They call it a blind spot. Why? Because you can't see what's there, right? But you know there's an area you can't see. An accountant or a tax pro doesn't know there's an area of tax law they don't know about. So when you say, do you understand the tax laws? Of course. Do you understand home business tax laws? Of course. Because they don't know there's a body of law that they're not even aware of.
My goodness, yeah. Well,
so you can't count on getting all the tax breaks from an accountant or a tax preparer just because they have some initials after their name.
Well, I did notice in reading the book that you give a lot of the very specific information about the tax credits and benefits that you talk about.
I do, and in fact, I presume you're referring to the references that I give. If I talk about a tax deduction in general layman language, and you show that to a tax pro, they're going to say, "Oh, he doesn't know what he's talking about." So, what comes at the end of that section, Carl? What did I do? I cite the specific article and section number of the tax code, or the specific tax court ruling that authorized it, or the congressional law that approved it.
Well, I can tell you, if I went to my tax man with this book and he didn't want to take the advantage of the tax benefits, I'd probably be making a switch myself.
Well, when the IRS reviewed this book, they didn't ask for a single change to be made, ask, request, or demand a single change to be made. So that I took as... I really took some pride in that because my objective was to create a book that was easy to read and technically accurate. Well, I knew it was easy to read, and when the IRS didn't ask for any changes, I think that told us that it's technically accurate as well.
Sure, I would say that. Now, let me ask you, what would be an example of, say, a big dollar deduction that most people don't take advantage of?
I think probably one of the biggest ones that's easiest to claim is the use of your personal vehicles for business purposes. A lot of people don't claim that deduction because they think the record keeping is too hard, or they don't know what really constitutes a business use of a vehicle, and yet it's this is one area where the IRS has been very clear about what's deductible and what isn't, and how much you can deduct, and et cetera. And it's also the area with the easiest record keeping requirements. For example, the easiest way to keep records, there are 4 different ways you can keep records for vehicle use. I only teach one because it's the simplest and you only need one. That's the 90-day rule. The IRS now has a section in the tax code that tells you that if you keep records of every use of your vehicle for 90 consecutive days, that's 1/4 of the year, they'll let you extrapolate those numbers for the full year. You have no record-keeping requirements at all the other 9 months of the year, but you get the tax breaks for the entire calendar year.
Oh, that's amazing. You just saved me 9 months, by the way.
And during those 3 months, all you have to write down, every time you start your ignition now, this is every time, even for personal trips, you don't have to tell them where you're going and why when you're on a personal errand, but you've got to record it so that they can check your math. All you've got to write down when you start your ignition is the date, your destination, your primary purpose, and either your starting odometer reading or the number of miles to your destination. That's it. It takes about as much time as it takes to fasten your seatbelt.
Wow.
Do that every time you start your car for 90 days, you're done for the year?
Yeah, that's fair. That's fair.
And then what do you get when you do that? You add up all the business miles at the end of that 90 days, multiply by 4, right? Because that's only 1/4 of the year. You take that number, then you multiply by the standard rate, which the IRS sets every year. It's going to be, for the time being, it'll probably be somewhere around 50 cents a mile. In fact, it's exactly 50 cents a mile for 2010. They adjust a little bit each year. 50 cents a mile doesn't seem like much. Rubbing 2 quarters together, that's not a lot of money. But imagine if you're putting, say, only 5,000, you're probably putting more than this, but if you only put 5,000 business miles in your car in a year, that's $2,500 in tax deductions. That's nothing to sneeze at. And the record-keeping requirements, you had to write down, you had to spend maybe 5 to 10 seconds each time you get in your car for 90 days. That's easy as it gets.
Yeah, that's easy $2,500 to earn.
Now, if you're audited and you took a vehicle deduction, one of the first questions an auditor will ask for, they'll want to start with your vehicle deduction. Why? Because it's a big ticket item. So if they can disallow it, then you got to pay taxes on $2,500. But the reason they ask the question is because their first question is, may I see your vehicle mileage log? And most taxpayers will say, what's that? Anybody listening to this CD will not have that problem because you know exactly what to do now. Write down the date, where you're going, why you're going there, and how many miles you're driving. Do that for 90 days. That's your vehicle mileage log.
Very good. Now, I had heard before that all you had to do is put a magnetic sign or write nowadays they just put signs in the back of the window and that's good enough. You can write off everything.
I'm glad you mentioned that because that is such a widely held misperception that the IRS actually has issued a bulletin on that subject because they want people to know that, the IRS it gets very aggressive in education when it's something to their benefit. But they don't go out of their way to tell you about things that will help you, that reduces the income. So what they want you to know is they were this blunt about it. They said if you put a magnetic sign on the side of your car, you may write off 100% of the cost of that sign. Period. There are no deductions for the car. The deductions for the car have to do with when you use the car. Now, way back when gas used to be cheap, you might be able to make the claim that my car is a traveling billboard, but nobody has a traveling billboard at $2.50, $3 a gallon. So that one won't work.
I see.
But you can write off the cost of the sign.
Interesting. Okay, well, that answers that question. Now, obviously, I mean, I commute a lot. I have to go from my home to my office, and because many people are just doing a home-based business part-time. So, is there a way to be able to benefit from that commuting time? Because that could be substantial, I would think.
That's a tricky one to answer because there has not been a tax court ruling on the subject, and the IRS hasn't issued a clarification on the subject. But here's where the question, where the possibility exists, and that is that there's a section of the tax code that we refer to as the 2 business location rule that says that travel between 2 places of business, 2 business locations, is deductible as business travel. Well, and it also says that commuting is not deductible. Commuting is defined as travel from your home to your place of business and return to your home. The question then comes when you ask, what happens when one of my places of business is in my home? When you walk out of your front door to go to your W-2 job, are you leaving your home or are you leaving your home-based business address?
Fair question.
Now, I've studied this, and I've actually, we're going to give a website a little later in this CD, but people can go to this website, and under Resource Center, there's a drop-down for free downloads, and there's a special report that I've written on this subject that gives you all the tax code. You've got to basically decide for yourself, you and your tax pro need to decide whether you're going to take this deduction because it has not been tried in the tax courts. But here's what I recommend is that to make it as clear as possible and make your case as strong as possible, I recommend that in the morning when you get up to go to your work, now we assume you have a W-2 job that you drive to Monday through Friday, a JOB, just over broke. We assume you have one of those, and that's where you go Monday through Friday, and then you also have a home-based business. So in order to clarify which door you're walking out of, because you've only got one door, you live at 123 Main Street, and that door has 123 next to it. How do you know which door that is? My recommendation is get up early, and when you're ready to go to work, be ready 45 minutes early, half hour, 45 minutes early. Go into your home office and do some business work. Send some emails, return some phone calls, do some planning, fill out some deposit slips for all the money you're making in your home-based business. Do something, and then annotate that in your date planner. Write down a note that from 7 to 7:45 a.m. that you returned business phone calls and did business planning. Then 7:45, you leave to go to work. Now you've got some evidence that proves that you did work immediately before walking out the door. Now I think that is probably going to fall under the 2 business location rule. When you return in the evening, If you walk in the door, throw off your jacket and watch the news and drink a beer, you just finished a commute, non-deductible. But if you walk in the door and do what's natural, and that's go to that telephone with a flashing light to see what voicemail messages you've got, if you do that while you're in your home office, and while you're there, you may as well crank up the computer and see what emails you've gotten during the day. You do that for half an hour, 45 minutes, an hour, 20 minutes. There's no magic amount of time. Just don't make it look like it's a token amount just to deduct your commute. So I'd recommend at least 20, 30 minutes. Spend 20, 30 minutes doing that. Again, make a record your day planner. There's a precedent-setting tax court ruling that says that a taxpayer's own handwriting in their own day planner is sufficient legal evidence for most deductions.
Wow.
So that notation in your day planner, you can input that in your computer if you want to. The IRS has finally discovered that computers are here to stay. And so they now will say electronically maintained data is also works, but the tax code specifically actually says that you need to keep a written record of your tax deductions. Well, those notes in your day planner in your own handwriting can be that written record.
Fantastic.
I think we just converted a commute into a tax deductible business trip when you use the two business location rule.
Well, I mean, it makes sense to me because as soon as I come home, that's exactly what I do. I have to check my emails and, I go through the mail, and if I've got checks, I log those checks in. I do whatever I have to do for my business first. And so it just makes sense. Yeah. I mean,
and you know what, Carl, even though this hasn't been clarified by the IRS, it has not been ruled on by the tax courts, which means that there hasn't been a case in tax court on this subject. Even though that's true, there's no risk associated with taking this deduction because the law says that when a taxpayer questions whether or not an activity is deductible, and they seek competent advice, which you can say you're doing by listening to this CD. Mm-hmm. You seek competent advice, and the advice you get is that there is no advice. There is no guidance from the IRS or from the tax courts. The law says that if an auditor disagrees with you and says that, no, this is a commute, it's not deductible mileage, the worst they can do is cause you to go back and pay the taxes on the money you wrote off, which you would have paid anyway if you didn't take the deduction. They are precluded from assessing any fees or penalties. Oh, okay. Because you looked for advice, the IRS didn't give you any, so how can they punish you for that? So there's absolutely no risk in taking this deduction. So you might as well. It can be worth hundreds, if not thousands of dollars if you're... When I first started researching this book, I was living in the Washington, D.C. area. I was commuting an average of 3 to 3.5 hours a day round trip. If I'd known about this at that time, I would have saved a lot of money in taxes for my commute.
We're both in Southern California now, and commuting is part of our daily life as well. So
yeah, I like my new commute though. I live on a yacht, and I commute. When I get up out of bed, I climb 3 steps. I'm in my home office.
There you go.
That's the kind of commute I like.
Even better. Well, listen, Ron. Along these lines of a home-based business, obviously there's a whole variety of home-based businesses that you can get into. Some are, very expensive to get into. Some are less expensive to get into. But there's certainly startup costs that are involved with starting any home-based business. Is there any additional help that the government can offer on startup costs?
There are 2 things that I can tell you on that. First thing you want to do is make sure the business that you're going into is going to qualify. And so let's talk about that first, and then I'll answer your question. When Congress passed these tax breaks, they said we have to have some requirements. But the requirements are so simple. There are only 3 really requirements. Number 1 is that you run your business on a regular and consistent basis. Now, remember, the reason they want you to have this home-based business is so you have something that you can ramp up to full-time if you had to on short notice. That's the reason they want you to keep working your business regular and consistent. What's that mean? Well, tax courts ruled in favor of a taxpayer who said she worked her business an average of 45 minutes a day, 4 to 5 days a week. And the judge says, ma'am, my job as a judge is not to determine whether or not that's enough to set yourself financially free. My job is to determine whether or not you're meeting the intent of the law, the intent of Congress, and I find that you do. So we now know that working your business 3 to 4 hours a week on a regular basis is sufficient for tax purposes. Mm-hmm. Not sufficient to make a lot of money probably, but obviously. For tax purposes. Second requirement is that you have a profit intent. The key word there is intent. That means the day that you get into a home-based business, that day you begin saving money on taxes. Because as soon as you start a home-based business, why would you do that? To make money, right? Mm-hmm. So you simply declare, I have a profit intent, and as of this day, I'm working my business at least 3 to 4 hours a week. You've now met the first 2 requirements. The third one is simply keep decent records. And that's a different subject, which we're going to talk about in a few minutes, I think.
Okay.
So now with those three things in place, Congress said that it costs money to get into a business. So you can write off up to $5,000 in startup costs for research, materials, inventory, things you need to buy to get started in your business, up to $5,000. Now, startup cost is defined as expenses that you incur before you hang out your shingle and say, I'm in business. And you can deduct up to $5,000 in organizational costs. Now, there are no organizational costs if you're a sole proprietor because that's the default setting. Mm-hmm. But if you decide you want to form an LLC or a corporation or something like that, then the legal fees associated with that, that's what's called organizational costs.
Okay. So
you can write off another $5,000 in that category.
Oh, potential $10,000 write-off there.
Yes.
Wow.
Before you've even opened the door.
That's amazing. So this is the kind of help that we're looking for, because a lot of people don't realize that this is available to them. And now, where do you get the $5,000? I mean, do you have to come up with it yourself? I mean, is there other ways of getting it?
Well, the Congress isn't going to give you the $5,000. That's $5,000 in tax deductions, not tax reduction.
Okay.
So if you're in a 25% tax bracket, that means you're going to get about about $1,200 to $1,500 back in your tax refund.
I see. Okay.
But while we're at this point, let's talk about that tax refund, though, because this helps a lot of people make a decision about getting into a home-based business. When Congress said we want to encourage people to get into the business, they did everything that I can imagine they could possibly do. One of them was when they told the IRS, don't make taxpayers wait till April 15th to get this new additional refund. Now, if you're going to get the average person, by average, the average American earns between $35,000 and $50,000.
Okay.
Right now, they tell me. That's what the media says. Somebody in that in that range is going to, with a home-based business, when they understand the tax breaks available to them, will increase their tax refund by about $3,000 to $5,000.
Okay.
Or more. The average, I found the average is $4,000 to $5,000.
Okay.
So let's use $5,000 because that's not a stretch to the imagination at all. Mm-hmm. So you've got two choices here. One is, let's say you got back a $3,000 refund last year. Well, next year it could be $8,000. But since the Congress told the IRS don't make them wait till April 15th, your other choice is to divide the amount of refund you're going to be getting by the number of paydays in the year, change a withholding statement called a Form W-4, which puts a prorated portion of that additional refund into your pocket every payday.
Well, that's interesting.
You get paid twice a month. That means that you take your $5,000, divide by 24, and that's how much your paycheck is going to go up every month. So it's a way of Congress putting that refund in your pocket on an ongoing basis because you have expenses for your business on an ongoing basis.
So that has nothing to do with how many children you have.
Nothing to do with it. In fact, I'm glad you mentioned that because the reason most taxpayers get a refund every year is not because the IRS gets religion in April. It's because they found a way to methodically cause almost every taxpayer to over-withhold their taxes. So they give them back, at the end of the year, you get back your extra $3,000 or $4,000, which means you gave Uncle Sam an interest-free loan for about 15 to 18 months, and they don't even say thank you for it. Uh-huh. And the reason that happens is because when you start your W-2 job, your first day on the job, you fill out a W-4 form. It's a little tiny form that asks only 4 questions. Your name, address, social security number, so far so good, right? Number 4 is number of allowances you want to claim. What the heck allowances mean? People think that means dependents or exemptions or number of people in their household. And so they write that number down. So if you got yourself, your spouse, and 1 child, and you write down a 3, that will almost invariably guarantee that you'll over-withhold taxes, meaning you'll get a refund.
Yeah, I don't even know where that idea came from, but I know most people think that it has to do with how many kids you have or family members.
The term is allowance. It's not dependent. It's not exemption. It's allowance.
Well, how often can you change that number or work on that?
Congress took care of that, too. They told the IRS, because this is the mechanism for getting part of your refund in every paycheck. They said that three parts of this law that I love. First part says any taxpayer can change their W-4 anytime they've had a tax-changing situation occur in their life. Now, what's a tax-changing situation? It could be buying a house. It could be getting married, getting divorced, having children, having a child turn 18 or 23 after college and they're no longer dependent. All those things will affect your taxes. Anytime you have anything occur in your life that will affect the taxes you pay, you have the right to go in and change your W-4. There is no limit. You could theoretically do that hourly if you wanted to.
Wow.
Part 2 of the law says your employer is required to accept your revised W-4. They don't get a vote. They can't tell you that you want to claim 8 allowances, you've only got 3 kids, because they don't even understand half the time. So they don't get a vote. But part 3, the part I love the most, is Congress said that the employer is required to implement that revised W-4, that new number, as of the very next pay period. So your next paycheck, if you walk in tomorrow morning and change your W-4, add allowances to your W-4, your next paycheck it'll have more money in it than the ones before it.
Wow.
And it'll stay that way until you change it again. And you can change it frequently. I recommend people review their W-4 status about once a quarter, because you can go in and make changes. When we first time we put a man on the moon, they didn't just point it toward the moon and it was done. There were thousands of mid-course corrections.
There you go.
Well, we need to make mid-course corrections in our business too, because you may find 3 months from now, if you calculate what the right number is for W-4, the right allowance number is right now, 3 months from now, maybe you're making more money than you thought you would. Maybe you're making less. Maybe your expenses are more or less than you thought you would. So just review it every 90 days or so and make a revision.
Well, that makes a lot of sense and clears up so much. And, the misinformation out there I'm finding is just almost unbelievable.
It is. Everybody's an expert on this subject, and nobody's an expert on this subject, it seems like. And
It seems like not even the IRS is an expert on some of it.
the IRS has actually announced that when a taxpayer calls or writes the IRS for advice on a tax-related question, they are not held liable for the correct answer.
Oh, my goodness.
Can you believe that? It's true.
Well, what about personal expenses? Because I know there's a lot of personal things that we do that maybe we could convert some of them into business deductions. Is that possible?
That's a big one, and it's an area that people sometimes refer to as the home office deduction. It's actually bigger than that. The tax form you fill out is called expenses for business use of your home. So it's bigger than a home office, but that's the category. And this is one where for a long time tax pros were saying it'll raise a red flag, it'll get you audited. Mm-hmm. It's gotten to now where I'd be afraid to not claim a home office. Because if I've got to prove that I have if I'm audited and I've got to prove I have a legitimate business with a profit intent, how can I prove that if I don't have a headquarters somewhere for my business? Where's your business based? In your back seat if it's not based in your home or an office somewhere? Mm-hmm. So with a home office or with business use of your home, you can convert quite a lot of your personal expenses into tax-deductible business expenses. Here's exactly how it works. What you're looking for is their business use percentage of your home. Let's say you've got a 1,000 square foot home and you use 100 square feet exclusively and regularly for business. Those two terms are important. That means you're only using these areas for business purposes, and you use it on a regular basis. If that's the case, then you have a 10% BUP, right? 10% business use percentage, 100 square feet out of 1,000. That means you can now immediately begin writing off 10% of your mortgage or rent. This is the only area under tax law, 18,000 pages of tax law. This is the only way in which a renter gets a tax break. You can write off 10% of your rent as a business expense if 10% of your home is being used for business purposes. That percentage, whatever that percentage is, I'm using 10% because it's easy to do mental math. Mm-hmm. It might be 23%, it might be 8%, it is whatever it is. You also can write off that percentage then of all utilities, gas, electric, water, sewer, trash collection, recycling fees, all that. 10% of your insurance, homeowner's insurance or renter's insurance, that percentage of your maintenance and repairs. All those expenses you're paying for anyway out of your pocket with after-tax money can become tax-deductible business expenses. Here's how that puts money in your pocket. If you got let's say you get a $100 bill from the electric company. First you'd say, where's the rest of my bill? Right. But let's say it's a $100 bill, $100 invoice from the electric company. If you have a W-2 wage earner, has to go to work and earn about $170 in order to bring home $100 in take-home pay to pay that bill. Because an employee has a three-step tax system. Step one is you work hard to make a decent wage. Step two, Uncle Sam will suck a big chunk out of that before you even see it. And step three, you get to live on the leftovers called your take-home pay. Mm-hmm. But if a business gets a $100 bill from that same electric company, the business only has to sell $100 worth of products or services in order to pay that bill. Because their three-step tax system is step one, you work hard to bring revenue into the business. Step two, you pay your business bills. And step three, you pay taxes on what's left.
Oh, wow. Completely different.
Completely different. Imagine what it'd be like if you got to bring home all of your wages. There's no withholding. Bring home all of your wages. You sit down at your kitchen table and you pay all your bills for the month. And then you look at your wife and you say, okay, Myrtle, how much we got left? Okay, we got to pay taxes on that. That's what businesses do. That's why there's such a huge tax savings when you are in both categories as an employee and as a business owner.
Wow, so it's a double whammy there. You get it on both sides.
It's huge. And there have been some changes in the home business, the home office deduction definitions recently in the past several months. The changes are that it no longer has to be a separate room, your home office. It needs to be a visually identifiable space. So it's got to look like an office. You could literally, if you had a one-room efficiency apartment, you could set up a table in the corner of that one room, put a computer and a printer and a telephone on that table, put a chair up against it. That looks like an office, right? Mm-hmm. That area is your visually identifiable space. That portion of that one room then can be your business use percentage of your home.
Wow.
And you can also use a portion of a closet. Let's say you have a large hall closet. One side you hang your out-of-season clothes. The other side you put your business inventory, supplies, promotional materials, or what have you. Well, 50% of that closet then is, if you took a snapshot of that and a viewer of that picture says, okay, it looks like half of it's for business use, you add that square footage to your home office. Mm-hmm. You can do that throughout the home, as long as it's areas that are used exclusively for business and that are visually identifiable.
Now, you've said a few times, you've used the term, if you qualify. I mean, is the qualification difficult to qualify for? I mean, is there any hoops to jump through here?
No, for the business use of the home, the qualification is that you have to be able to say you use the area exclusively for business. In the event of an audit, I bring up audits a lot, not because they happen a lot, but because I want to make sure that anybody who I coach is never has to fear an audit. They're going to be on par with the auditor. So if an auditor says, don't you ever let your kids go into that room and use your computer even once in a while, do their homework? The answer has to be no. Mm-hmm. They have no sense of humor when it comes to exclusive. They interpret it the way we interpret pregnant. You is or you ain't. Gotcha. There's no gray area. Okay. And so it's either exclusive or not. So that's the qualification. It's got to be, there are two. The first one has got to be exclusively used and on a regular basis. And so therefore you can't just, you can't claim you couldn't just set up a home office in the largest room available in your home and then never use it. It wouldn't qualify. So, but how easy is that to qualify for?
Yeah, that's being fair. It's being fair.
It's fair and it's easy.
Yeah, and we want to be honest. And
it's common sense, something you can't usually use when you're talking about tax rules, but this one is common sense.
Well, let me ask you another question. This is one of these things where I've mentioned it to different ones, and they've said, boy, that doesn't sound moral, ethical, or legal. And that is hiring your kids. Now, I'm not talking about, giving them $1 to go mow the lawn. Is there a substantial tax deduction available if you hire your kids? And what are the parameters for that, if that's possible?
It's huge. First of all, if you don't have a home-based business, a child has to be at least 16 years old to go to work to earn money, and sometimes 18, depending upon the type of work. That's controlled by the Labor Department, and it's in order to ensure the safety of the children. However, the courts have ruled that when a child works for his or her own parents in a home-based business, their safety is assumed. Therefore, children can work for their parents in a home-based business. Now, what can they do? Just about anything they can do in or around the home. They could do the filing. They can answer the phones for you. They can fill out your expense reports. They can clean your company office, wash your company car. How old does a child have to be, and what are the benefits? Tax courts have ruled that any child over the age of 6, not 16, any child, this is a quote from the tax court judge, a precedent-setting tax court ruling, that any child over the age of 6 can certainly perform viable work for a parent's home-based business. Mm-hmm. So what's the value of that? Well, if you are giving let's say you've got a child you're giving a $10 a week allowance to. You got to go to work again, earn about $17 to bring home $10 to pay them that allowance. But if they're working for you as a part-time employee of your business, that $10 then is wages. So it's tax deductible to you, so that you didn't have to pay taxes on that $10. The best part is the child also doesn't pay taxes on the income. A minor can earn up to $5,700 tax-free. So the money you pay them is tax deductible to you. The money they receive from you is tax-free to them. There's never any taxes paid on that money. It's a great, and then you invest that money into something which is going to grow, compound. You could easily have your children going to college on tax-free money, which means it's about equivalent to cutting the cost of tuition by 1/3.
Wow,
that's the value
amazing.
Of it.
Huge. I mean, we've just discussed,
deduction.
Just several things here that, and just to put it in a little bit of a context, it looks like by starting a home-based business, you're looking at least, $4,000 or $5,000 a year in tax benefits.
You're looking at $4,000 to $5,000 a year in an increased tax refund. When people say tax benefits, a lot of people think that means tax deductions. See, a tax deduction is an amount of money you multiply by your tax bracket. So if you're in a, say, let's theoretically say a 25% tax bracket, $1,000 tax deduction is only worth $250. But we're talking about somewhere around $20,000 in tax deductions for most people with a home-based business, which produces about $4,000 to $5,000 in a tax refund.
Oh,
it's
wow.
Substantial. It works out to be an average of about $100 a week. Think about this, Carl. What would it be like if every Monday morning, your favorite day of the week, I'm sure for most people, right? What would it be like if when your alarm goes off on Monday morning and you reach over to hit your snooze alarm, you see a crisp $100 bill on your nightstand, and there's a Post-it note on there saying, you can do anything you want to with this $100 bill this week. And by the way, P.S., there'll be another one here every week for the rest of your working life as long as you have an active home-based business. What would it be like to shove that $100 bill in your pocket or your purse every Monday morning and know you can do whatever you want to with that? Yeah. That's what it's like. That's the value of a home-based business, is an additional $100 a week cash from tax savings. Now, it's not really Uncle Sam's money. It's your money, but it's your money you're not going to keep your hands on any other way. It's going to go right to Washington unless you find a way to keep it in your pocket, and a home-based business is the way to keep about $4,000 to $5,000 or more every year in your pocket.
Mm-hmm. Well, I can also see that, that could basically help finance most small home-based businesses in the initial startup money and the kind of expenses that you'd have on a weekly or monthly basis.
That's the beauty of it. You're right. It does almost come out even in most cases. In some cases, you may even get more refund in taxes than it costs to run your business. But that was the idea of behind all these tax breaks that Congress passed. So if all of your business costs are being paid for by the tax savings, that means every dollar worth of commissions, bonuses, or sales that you earn is profit, because your expenses are already taken care of. It truly makes it possible for anyone to get into a home-based business, regardless of whether they have any money or not, because it's going to be cash neutral. If they get into a business today, if they could borrow the money to get into a business today, by the time their next paycheck comes in, they can have enough money to repay the money that it costs to get into the business in most cases.
Well, let me ask you this. I mean, we're talking about home-based business. Let's say that you start this home-based business and it actually takes off and it becomes a serious income. And now it's not, a secondary income. It becomes a primary income source for you. Do these deductions go away?
No, they don't go away, and that's what Congress and the IRS are counting on. It's what grocery stores call a loss leader. They know that they're going to lose a little tax money by encouraging you to get into a home-based business, but it's more than just the safety net that they want. They know some small home-based businesses are going to become very large. Some people are going to be very successful, and guess what they do? They pay a lot in taxes. Mm-hmm. Wouldn't it be great if you found out you're paying a lot in taxes and you were taking advantage of all the tax deductions available? That means you're wealthy.
Yeah, I would say so.
In fact, if you don't have taxes under control, a lot of people in home-based business, they got this goal in their mind. They want to be a millionaire. I want to earn $1 million a year in their home-based business. If you don't start to get your taxes under control in the beginning, when you become a millionaire wage earner, that means you really earned you're a half millionaire, because you will give at least 50% of that money right back to Uncle Sam. So now's the time to get your taxes under control, and this is the way to do it. And those tax breaks do not go away when you become wealthy. In fact, you're running off even more square feet, because now you're running off the square footage of a mansion instead of a chalet.
Sure. Well, we've talked about this, you and I, privately before we started this recording, the cost in waiting. Because obviously somebody who's listening to this for the first time, if you're not specifically looking at a specific network marketing opportunity or home-based business of some kind, then you're the person that gave you the CD is probably going to talk to you about one. So let me ask you, what does it cost for people to delay?
The cost of indecision, the cost of delay is huge. Here's a way of kind of visualizing what it costs to not make a decision, to procrastinate on making a decision to get into a home-based business. If you're listening to the CD today and you're not making a decision today, then tomorrow morning when you get up to go to work, before you go to work, go to your kitchen window and throw that window open and toss a $100 bill out the window, watch it blow away in the breeze down to your neighbor's house. Mm-hmm. And the next morning, do the same thing before you go to work, toss a $20 bill out your window, watch it blow away in the breeze. And you won't do that very long before when it starts to dawn on you that you literally are throwing away about $20 in cash in overpaid taxes daily, just because you don't have a home-based business, it kind of causes you to get focused a little bit on whether or not you want to get started on one. Personally, I can't imagine anybody who really understands what we're talking about not starting a home-based business. They'd have to be brain dead or living under a rock to decide that they would like to overpay Uncle Sam on purpose now that they know they don't have to.
Well, I mean, it's really a win-win situation. You have the win of offsetting your expenses to start the business by reducing your taxes. So, like you say, Uncle Sam's not giving you the money, but it's money that you're not having to give to him. So you have the money to start your home-based business, and as long as you're building it with the intent of making a profit, we all hope that you do make a profit. And if you do, then you've obviously won on both sides. And if you don't make a profit, you've won because it didn't cost you anything. You got to write it off anyway.
Absolutely. At some point, if you decide that whatever business you get into is not going to become profitable, you just change businesses or change the way you work the business. The IRS simply needs to know that you're continually trying to make a profit. So if trying one avenue isn't working, you try a different approach at becoming successful in that business or a different business.
Well, I know that we've just kind of touched the surface here on this subject. Obviously, we could go on for hours and talking more and more about it. And what I want to do now is really talk about what's available for people, that they can reach out and get this information very quickly, very easily. And I can tell you that I've read the book, Home Business Tax Savings Made Easy. The more you know, the less you owe. This was eye-opening to me, and I was already aware of a lot of these things because I've been in the home-based business arena myself for many years. I was a contractor before I got into the other home-based businesses that I've been involved with. So I was aware of a lot of these things, but you've opened my eyes to so many more things, and most importantly, in my mind, is that you've given me the tools that I can then take to my CPA and say, here, these are the deductions that I want to take, and here's why. And so I've not only informed myself, but I've informed the people that I work with so that I can properly take advantage of all the deductions. But I know that there's so much more that you have to offer and that we're going to make available for folks here.
Well, I think that for somebody to really understand and take advantage of these tax breaks, first thing you want to know is that Congress has passed more than 100 tax breaks for home-based business owners. Now, quickly, what you want to know is you don't have to understand all those. I've done the research, I've done the study, and you really only have to understand 7.
Okay.
If you understand 7 of them, you're going to put 99% of the money available in your pocket. And so what I would recommend to the folks listening to this audio is that what they really want, the bare minimum, I think they want 4 things. One is of course they want the book because that's the reference manual. That's what will show them what's deductible, and it's something to refer back to, and it has all the citations in it, the references that prove the deductibility of the things that I refer to in the book. Second thing I think most people want is some coaching. Can you learn everything from a textbook? Yeah, but it works better if you have a textbook and a teacher, right?
Sure.
You learn faster. And so I do small group telecoachings that in a matter of 2 weeks, I can have people through the process of understanding this and using the tax breaks to the maximum. The third component that you need to look at is how are you going to learn what records to keep and how to keep good records without it being a chore? See, the law says without documentation, there are no deductions. So in other words, you don't keep records, you don't get tax breaks. But the law doesn't say it has to be hard to keep records. And so I've found 2 ways that I endorse, two different systems that I endorse. One's a paper and pencil system, one's a software system. Either of these two take about 1 to 2 minutes a day to keep your records. At the end of the year, you'll have audit-proof records. So you want that third component. And the fourth component is you want to be kept up to date because tax laws change constantly.
Sure.
And so you want to be kept up to date. So I've bundled those things into one package, which I call Basic Essentials for Home Business Tax Savings. It's everything you need, but it's nothing. It's like all the stuff, but none of the fluff. I haven't padded anything in there. It's the bare basics of what you need if you want to put that $3,000 to $6,000 or so cash in your pocket starting the day you launch your home-based business.
Well, I know just looking at the book, the references in there by itself is worth all of that and more because, I wouldn't want to go looking up all that stuff. And like you say, I like the idea of having 7 things to think about instead of 107 things to think about. So, so far you've got me 100% here. Now, I know that what we've done is, for those that are listeners to the CD, if you go to www.homebusinesstaxsavings.com/CD special, This is only available to people that listen to this CD. You can go to that website. I'll repeat it one more time. That's homebusinesstaxsavings.com/CD special. And you'll find a discount on all of the products that he's talked about today. And that's our gift to you for listening to this CD. And Ron, really fantastic evening here. Really enjoyed it. It's been exceptionally eye-opening for me as far as how I look at my future tax deductions. I know I've got to get a little bit better on some of my note-taking. So, you know, that, and this is a great time of the year to start. We're starting a new fresh year, a new fresh decade, and it's great to have you on board here.
Thanks so much. I really believe that it's my obligation to be a good steward of God's money. It's not my money anyway, it's His. I personally believe it's my obligation to be a good steward of His money, and the best way that I know of one of the ways I know of doing that, of being a bad steward, is overpay my taxes. Now, we're told that we need to, or that we have an obligation to pay our taxes. I don't read anywhere where it says you get an extra room in your mansion in heaven if you overpay your taxes. So I believe in paying every penny that's due in taxes, but not a penny more.
That's right. Well, I agree with that. And one thing I can tell you, and my references here and looking at it, is everything that we've talked about here today is moral, legal, and ethical. So you don't have to have any worries about that. The documentation is right there in the information that you made available to everybody today. And if you're listening to this CD, I can tell you the fastest way for you to start is to decide to make a move now. Let's not throw that $20 out the window today. Let's call the person that gave you the CD, call them up and say, listen, I want to start my own home-based business. I want to take advantage of all the deductions that you learned about today and start making money today.